Traders, Gary Wagner here just before 10:30 in Honolulu, 4:30 in New York, second day of September, and this is the daily report for gold and silver. We do have precious metals mixed today with gold trading lower. The rest of the complex actually trading higher on the day. First to gold, 1134.23, the lows 32.23, the highs 42.46, so about a $10 range. We, of course, are in the market higher than this, roughly at 1140. Our stop is sitting below 1129. This lower pricing that we're seeing in gold is really a net result of some data that came out suggesting that the jobs scenario in the United States is actually pretty good. Of course, all traders are awaiting the official jobs report, which will come out on Friday of this week. Now, in all actuality, when we look at a net change of gold today, it's really dollar-based, because if you take a look at the Kitco Gold Index, let me go ahead and bring that up for us. What you'll see is quite interesting, and what we see is as follows, that when we look at the Kitco Gold Index, what we see is it's predominantly a dollar strength that's providing a negative slant to gold. In fact, about $7.20, about $7 of the negative $5 that we're seeing right now is really due predominantly to dollar strength. And then when we look at actual trading in the market, that's actually bringing it up about $1.50 on the day, and therefore we're getting our net change of about $5.70. In other markets, you can see that silver's up $7, platinum is up $13, and palladium up $12 on the day. Now, as I said, although we are awaiting the official jobs report, which will come out from the government on Friday, the U.S. ADP National Employment Report was released today, and that showed a net gain of about 190,000 jobs. But that was, however, slightly below expectation. Now, in terms of the market itself, we did have our equities markets higher today. Thereby, we had a stronger dollar also. That put some pressure on gold. And really, you had, after the turmoil that we have seen over the last couple of weeks, and really more than turmoil, extreme volatility, we really saw a decline in that volatility and therefore some pressure on gold. Now, as we look at gold right now, as I said, trading about 1134 at this point, we do have our stop below 1129. That should hold good. Really what I'm looking at is having that stop below these couple of real bodies here, because that's the area this market needs to hold. Of course, we had a nice rally as we saw this market come off of these lows at 1071, took us up to this top. So this is an important ratio that we want to deal with, and this is at 38% of that ratio, and that's one of the reasons that I believe that that is a good place to put our stop. As you can see, the market came down, didn't come really into our area, but we could easily see the market, we corrected, it moves up a slight little retracement in there, and then a continuation to the upside. What we don't want to see is any kind of move into this particular area, because if it does, we could see this market kind of backslide a little bit. My expectation is that we should see some bullish sentiment enter the market. So as we spoke about, there are some outside influences right now that are definitely affecting gold, dollar predominantly being the main one, because that is where we're getting some gold weakness just simply due to dollar strength. And I've just gone ahead, I've pulled up a daily dollar chart, and you can easily see the kind of move that we're looking at, really taking back all of yesterday's loss in the market, and at least at this point is almost near the open of yesterday's trading activity, trading up about 0.5% on the day. And of course, one very interesting market that definitely is kind of interwoven into gold and dollar prices is oil. Oil trading higher today after we witnessed probably the most dramatic sell-off in oil since we saw it sell off back in 2009, coming from over $100 a barrel, then bouncing to those lows at around 32, coming back to around 60, which is this area right in here. This recovery was extreme, it was dynamic, it was quick. 3 days of activity, incredible activity in the oil market. That was followed yesterday by the market moving lower, and you can see we're about mid-range through yesterday's drop. So we'll have to see if Oil strength continues, and if we actually saw a real pivot point or a bottom in oil, that's going to be interesting to follow over the next couple of weeks. So silver is trading up on the day, up about 10 cents, about 0.75%. But we are looking at a weekly chart, and really when we look at that, what we can absolutely extrapolate is we are trading near the lower end of this trading range. It's where the majority of these real bodies have fallen on light days. We also have this dramatic low at $14. I believe that we truly have some support at roughly $14.50. I think we've tested it and come off of that. But until we go back above at least 15, it's going to be very, very hard for me to be bullish on silver overall. This is Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.